Much so. So we've had an excellent first half. Our ambition is to be the UK's leading retirement savings and income business. We have a clear financial framework focused on cash, capital and earnings, and we delivered strongly on all three in the first half. So our operating cash generation is up 19% to £647 million. Our balance sheet remains very strong, and we've repaid £250 million of debt in the first half, which is pleasing progress to what we're trying to achieve there. And then in terms of earnings, our IFRS operating profit is up 15% to £360 million, all of which has enabled us to increase our dividend by 2.5% as part of our progressive and sustainable ordinary dividend policy at the interims.
Let me just go one more boring question on that leverage or debt ratio as well. You've gone from 36 to 35, I think. I think some people were looking for a lower figure on the progression towards a 30 figure.
Yeah, so we have a target on the leverage ratio of getting down to 30% by 2026. We're very confident we'll get there. Two things we'll be doing. One is taking a further 250 million out of our debt stack, so that will reduce about 2 percentage points. But in particular, that leverage ratio is driven by the denominator, which is own funds, and we're building a very strongly growing, organically growing business. We're growing own funds, recurring own funds is now growing, and we're very confident we can increase the momentum of that growth to grow those own funds.
We've got a bit of time with you, but that's very important because historically Phoenix has grown from buying in funds as well, but you're saying actually, and that's a very important part of the business, you're growing your own funds now as well.
Yeah, absolutely. So we own Standard Life, one of our key businesses. That's growing really strongly. So, for example, our workplace pensions business, we grew the net fund flows to £3.3 billion. That's up 83% year on year. So we've got excellent organic growth, and that's why we're confident of growing our own funds and hence reducing that leverage ratio down as a result of growing the own funds, but also strong growth in all the metrics, leading to good growth in the dividend over time.
There have been plenty of tailwinds out there, very strong economic growth in many parts of the world, very strong interest rates as well to work with. That's changing. We've got questions around whether a soft landing can be achieved. Interest rates are starting to come down. Of course, this week we're watching the Fed. How does that changing dynamic impact you in the next 6 to 12 months?
So at Phoenix Group, we hedge out the major financial risks. So our cash generation, both short-term and long-term, is very predictable, and hence people can be really confident in how secure our dividend is. But generally speaking, interest rates coming down, which is the thing that most people expect, we would expect, are positive for our business. It's positive for our customers, that they obviously like to have less interest payments on their mortgages, for example. It's also positive for things like our leverage ratio. If interest rates come down, our leverage ratio will come down with that.
Does it change behaviours you're seeing, whether it's the workplace, whether it's individual people looking at pensions? Does it change their view on whether they should stash more money away when we're talking about a high interest rate environment versus a slightly lower one?
Yeah, so what I'd say generally, Karen, is that when interest rates are high, people are often quite happy to leave their money invested in cash and deposits. As interest rates come down, they're more likely to look to seek to get a higher return. So, for example, in the first half, we launched the Standard Life Smooth Managed Pension Fund, which is basically offering people equity-type returns, but in a smooth way through retirement. And we're seeing a high level of demand for that type of proposition. So lower interest rates, generally people would invest more into things like pensions.